Welcome back. Remember, we were just talking about how a lot of capital market related stocks, wealth, capital markets, broking, all these stocks have become the market's darlings. Well, it's a good time to then welcome in our next guest on the show because he, comes from this particular sector. So from the sidelines of the 9th Motilal Oswal Annual India Ideation Conference, we now have with us Ashish Kehair, MD and CEO of Nuvama, to talk about the business outlook and how they see the landscape. Ashish, great to have you on the show. So as I said, the market's really been looking at this narrative of a lot of retail participation in the market, more wealth. Tell us how you're placed. Throw some color on a lot of your different business verticals and sort of what you see ahead stepping into the new year.
Unfortunately, fourth quarter we can't speak about, so I can talk to you about 9 months. So I think all the business lines have done well for the first 9 months. Overall economy has been doing well, so that will have an bearing and impact on the lines of businesses which we have, because ultimately we serve individual clients who are either business owners or who work in businesses. So if economy does well, companies do well, real estate markets are doing well. As a result, our clients also are doing well, so that has a direct impact on business. And I think structurally the underlying strength of the Indian savings market is actually very, very strong. We've reached a very high level now. We are more than 300 lakh crores of financial savings. Now, if this compounds at a 10-12%, this can actually double in the next 6-7 years, which is a very, very large amount, and that will have a positive impact on all the people who are doing wealth management or asset management businesses.
Ashish, hi. Morning. Rima here. Now, you've shared a very positive outlook. You've posted a growth of 29% in the first 9 months of FY24. Have you set out growth targets for FY25? Which verticals will lead growth for you? And what would be your key drivers?
So if you look at our overall business, I think it's broken up into wealth management, asset management, custody clearing, and capital markets. Right now, the way we are poised, I think all the vectors are going well. We will be, at least in line with the market or slightly better than the market growth and industry growth, which will be a function of GDP growth. Exact numbers we don't guide across our businesses right now. But overall, if you look at the industry over the last 4-5 years, I think 15-20% revenue growth is what most of the players have been able to achieve. Some have grown slightly faster than that, depending on how they are placed. I think that trend should continue at least in the next year or so.
Okay, fair enough. Ashish, let's just focus on the capital markets business, because a lot of the improvement in profitability is driven by this business, which inherently is cyclical in nature. So, of course, the cost-to-income ratio has improved, but is this actually sustainable, this pace of growth and this improvement?
Yeah, so if you look at the overall profitability movement, and if you look at the 9-month numbers, and yes, there is some impact which has come from capital markets this year, but within capital markets also, you'll have to segregate the businesses. So I'll answer that question in two parts. Firstly, if you look at the overall cost income of wealth management business, from 2021, when we were closer to 80%, we have fallen down to around 65%. So there is about 15% reduction that has happened in wealth management business, and a chunk of profitability has come from there. In capital markets, again, we break down the business between custody clearing, investment bank, and institutional equities. Custody clearing is not so correlated with capital markets. It's more correlated with the yields or the interest rate curve. So it's slightly different. And the business is also not as volatile. And even in our investment bank, actually our positioning is slightly different, because 50% of our investment bank comes from fixed income, which typically has a secular growth, because corporates and other borrowers and institutions, they have borrowing needs which keep happening every year. Unlike equity, where the fundraise happens when there is high amount of economic activity or the valuations go up, then people do IPOs or FPOs or QIPs. It's not the same for debt. Companies borrow, they have to repay, they have to again borrow. So it keeps growing in line with your multiplier to the GDP, just like the banking sector. That's how our fixed income is positioned, and that's about 50%. So that leaves only 30-40% of investment bank and some part of institutional equities. So you can say about 5% of the revenues may be volatile. The rest is more secular. Of course, there's an economic dislocation. Everything gets impacted, but it's not so volatile as it appears prima facie if you look at the numbers.
Okay. What's the update on your offshore propositions and what is the opportunity that you see here?
So I think opportunity is three ways. One, our Indian clients now want to have something outside, typically the ones which have grown in size. Second, there are non-resident clients which want to have a slice of India. So there is inward to outward, outward to inward, and then there is offshore. So there are three pieces of the puzzle. We are currently in the process of getting our licenses and putting up offices. And as I said earlier also, we will be gradual and measured in how we approach this because these are newer markets. The cost structures and the regulatory landscape is very different from India. And once we establish the correct business model, then we will ramp up.
Any timelines for this, Ashish, for setting up the international footprint?
Regulatory license, I think one of them is expected in another 1.5 months, and the other one, which is Singapore, is slightly more time away. The one which is there in DIFC is expected in the next 6 to 8 weeks.
Okay, Ashish, we'll leave the conversation here for now. Thank you very much for joining in. Well, we leave the market still above 22,000, but a bit of a give off from the top of the trading session. 0.8% up on the benchmark indices. Banks are outperforming large caps like HDFC.